say her last name, so I'll let her tell you. And she's here today as a favor to me. She spoke at an event that I did the other day, and she absolutely nailed it. And she is beautiful inside and out. And she's going to talk to you guys about accounting best practices, and then we're going to give you an opportunity to ask questions. If you are not taking notes, then you are not doing it correctly. Because this is a luxury. You know, normally when you start a business, like, it's hard to start it on your own. So the fact that we have Sherron here talking to us is a really good opportunity. Or if I can follow, or is this really?
Let's see.
All right.
So I always have my notes, but most of the time, when I get up here, because I have the gift of gab, and I'm full of all this information. It's debatable whether it's useful or not, depending on who my audience is. But you guys are going to be able to ask me any question. Normally, having a consultant with a CPA, like Hallie was saying, is that
It costs money.
Okay, yes, that's the best way to say it. So I am starting a new venture. So I'll just start off by telling you guys a little bit about myself. I have been in accounting field for 3 decades, all my adult life. And I started off in corporate doing bookkeeping for a real estate firm. And in New York, I used to have my real estate license at 18. So I know a little bit about the real estate background, and I still, that's part of my portfolio today, is investing in real estate and rentals. And moving on from there, I worked for the Reverend during 9/11, and then when I moved to Florida 2 decades ago, I started doing public accounting, which is more, public accounting means that working with small businesses, doing taxes, tax planning, financial planning, that type of stuff. Had a second kid, and the world of public accounting was too rigorous, and of course they want your firstborn from you sometimes. So I went out on my own, and I started consulting and working, and ended up doing that. So for 16 years I've had my own public accounting firm, and working on my own, and revolved. My number one job was being a mom, and now that my kids, my oldest is old in college, and my youngest is 16, studying for his SATs. So it's time for me to do what I really want to do, and go into my passion, which comes the Modern Savvy CPA. So I ventured out into my own financial literacy YouTube channel starting the beginning of this year, because my passion for financial literacy and teaching everyone about how to manage their money and not have their money, not be a servant to their money. And that goes from business, individual, taxes, kids, college, you name it, you can do it. You just have to have the right tools and like clear all the noise that you hear out there. And the first thing I'm going to tell you guys is there's no 3 really good hacks to surviving all of this. It takes a mindset, and it takes, you know, understanding overall financial literacy and having your own business. The first thing that you have to think about, which I always talk to my business owners, is that, is it a job or is it a business? That's the first thing you need to be thinking about in your head. Are you working a job, or is this your business? Because the way we do jobs is different. It's a different mindset than having your own business. So that's the first thing I want you guys to think about, is your money mindset, and your money mindset towards your business. So like I said, I do have a background in real estate. A lot of my clients are builders, GCs, real estate investors. Some of them, a lot of America is, especially Florida, is very lucrative, as you guys might know, for foreign buyers. I've dealt with FIRPTA before. I still deal with a lot of FIRPTA. I don't like dealing with FIRPTA, but I do, because it's part of our market down here. And the IRS still doesn't understand FIRPTA themselves, so they can't even help us with it. So if any of you have dealt with that, you understand that. But today we're going to go over some of the basics when it comes to having your own real estate company, having your own real estate business. So whether you guys are your own person, I understand real estate as each broker having their own, it's their own business, even though they collaborate with an office, collaborate with a hierarchy, they're managing their own business, they're managing their own finances. So some of the key takeaways that I want you guys to start off with is, making sure you have good accounting practices. So what does that mean? So one of the things that we understand more now, one, is that post-COVID, we had a growing entrepreneur field. Pre-COVID, we had a growing entrepreneur field. Post-COVID, we have an explosive entrepreneur field. So, being able to manage your money and your business at a business level is really important. But we haven't had the education backing for that, and you're not alone. So you might think that, oh my gosh, I'm a real estate agent, I don't know anything about my business, managing my business or managing my money or anything like that. I have clients that are doctors, lawyers, attorneys. You shouldn't be the one that is doing everything for your business anyway, but you do need to be financial literate. You do need to understand everything. You do need to know when it's time, there are certain things that you can do yourself, and when you need to seek a professional. So you need to have all the right tools in your toolbox. You don't need to be an expert in using all of them, but you just need to have all the right tools in there that you're going to be using once in a while, and you understand where you're going to need a professional. You might be able to tighten a lug or whatever it is, because I'm so not a home improvement person, on your toilet if it's leaking. But if it starts exploding, you know that you need to hire a plumber. So it's the same thing when it comes to financial literacy. If you're going to have your own business, you need to be financial literate. You need to understand the overall being of what's happening with you. So, and then you need to understand when you need to hire professionals to help you with different things. So accounting practices are really important. When we're done with this seminar, I am going to actually hand out some cards for you guys that you're going to have a QR code that is going to include my YouTube channel. When you go on there, you can click on any of the videos. This video would be uploaded also. So if you miss any of it, you're going to be able to look back at it on our YouTube channel. And there's a place on there that it has where you can register your name, your email, and your phone number. And I'm going to be able to send you guys a little chart of expenses that are particular for your field, categories that are particular for your field. And believe it or not, it's a changing world. So an expense categorization that I would have given 10 years ago is not the same that I would give you guys today. So it's a changing world when it comes to that type of things. But so you would understand that. So definitely that. So accounting wise, you need to use your technology to help you with it. The first thing I have to tell you guys is you need to have a separate credit card for your business and a separate bank account. A separate credit card and a separate bank account. Keep it separate. If you have a business, then you need, even if it's a small business, even if it's your freelance, you need to keep that part separate. Why you say that? One reason is because when you are, you're gonna forget, you're busy, right? If you're charging on this credit card, that credit card, here credit card, even if you do that in your personal life, then you'll forget to pay a bill. You don't remember which credit card you use for certain things. When you have a separate credit card and a separate bank account for your business, even if you're busy and you haven't gotten all of your information together, the information is there. Some banks keep the information for 2-3 years now. So you're able to go back, look at it, upload it into your software system, review it. You're able to see what you did. I have numbers that I have in my software. I can, from the start of my business, I can tell you what I spent on software or what I spent on, different things that are happening, comparing it to what I'm spending now. Do I need to be spending these things? Sometimes you don't even know that you're spending, I have a client that's an eye doctor. She's really, really good with her listening to what I have to say. And 10 years ago when she started and did her build out and spent $500,000 on her build out, we were getting back taxes those days. We were able to go back and get refunds for her because she had so many losses. Today we're looking into Super 401ks for her because she's already netting about $1 million. So it's the information and the advice that you're getting at the beginning to the end or along the way differs depending on where you are within your business. She is a little frugal when it comes to tax and business planning. So I do a lot of little things for her, and I do her taxes, and we talk about different things, but we don't do quarterly reviews, or we don't do annual reviews with her when it comes to her expense wise. One last year I did a review on her, and she had this social media that she was paying $4.95 a month for, and she's been doing it for 5 years. And I'm like, how is this going for you? You're paying almost $6,000 for this service. Are you getting anything back? Are you looking at it? I sat with her an hour and a half, and I'm going through, her 3-year financials. And I'm like, you had this, let me go back, you had this for 5 years now. How is it? I said, well, really? I just have them automatically take the money out. I don't really know. I'm gonna have to look at that. They were supposed to do this. So it just by that hour and a half spending with me for a couple of $100, she saw $6,000 a year expense that might not be something that is benefiting her, that she started 5 years ago. So just by looking, and it gets you thinking, gets your mindset into something. So having your picture is one thing, that's the importance of accounting, but being able to read your picture, being able to look at your picture, being able to dive into it is priceless. It's priceless. It's going to save you in the long run. I have another client that a lot of my clients I've babysat. And I don't have time to babysit them anymore. So I'm like, yes, it's my fault. I've babysat you guys. You guys try to do your accounting yourself, and it didn't work out. And she thought she deposited a check for $7,000, but she never reconciled her bank account. So she didn't know that it didn't really deposit. She just cleared it that, the client paid her, but it never went into her bank. And I'm like, something is wrong here. And I'm like, I've told you need to get a bookkeeper, so I'm giving her lecture now. And she's like, yeah, but I can do it myself, blah, blah, blah. Most of my professionals think that they can do everything themselves. My doctors and lawyers are the worst. No offense if you're watching any of my clients, but they know I'll tell them the truth. And
same for us, doctors and lawyers.
So they all think that they can do themselves. You probably can, but why do that yourself? I was just telling Chala that my social media was taking me 10, 15 hours a week. I hired her, and she can do it in an hour and a half because that's her thing. That's not my thing. And I was literally crying while I was doing it because I hated it and I didn't know what I was doing. So the $7,000 check, she's like, no, I deposited that. I said, well, I don't know where you deposited it, but I don't see it in the bank statement. Do you look at your bank statement? Yeah, maybe. I'm like, okay, so this is 2 years of bookkeeping you could have paid for with this $7,000 that if I didn't find it here, it's not in your bank. She never deposited it. She must have taken a picture, but it never registered. So she didn't reconcile her bank account, so she didn't know. So these are just tiny little things. You're thinking, oh my gosh, I can't afford this. But these are just tiny little things that if you mess up just one time, you've lost more than you think you can afford. So you have to weigh, the checks and balances. On top of that, you're lost the time because you spend all that time doing it yourself. And I'm not saying there are people who do get bookkeeping courses and they're able to do stuff themselves. But sometimes you do have to hire a professional. So that's my soapbox stuff. So now let's go into actual real estate accounting. So there are a few things that I notice with my real estate people that they don't think about. One of the things that they don't think about is their home office. And especially in today's world, understanding your home office. If you have a dedicated space in your home that you use for most of the time, is you know, you need to take that into account as one of the expenses within your business.
Are you allowed to take that deduction if you have a real estate office that you also go to?
Yes,
Okay.
yes.
So-
It's if it's a dedicated space.
Yeah. Okay, so
Yes.
if agents have like a dedicated desk here, and they also have a home office that they work out of, because I mean, real estate is like that, right?
Yes.
They're allowed
Yes.
to do both?
Yes,
Okay.
you're allowed to.
Quick question. So I've been, measuring my little square footage of my home office, and I take that square foot percent of my total home, and I can deduct that off my utilities, and, can I deduct, also.
Yes, there is a
deduct that-
formula. There is a formula that you can use. I can go over it when I'm done, like in detail for you.
But the main question, my main question was, my home office is in a larger room, so I just take the square footage of what I think is my office.
Yeah, so your dedicated space,
Got
it's
it.
it's what your dedicated space, and then you do add common area. So let's say you have storage and things like that. So
Okay.
I'll go into that a little more detail at the end once
This is
we
one of the
start.
biggest questions that we
Yeah, so that's why I started talking about it first. The second thing is your business card. So there is a lot of analyzation that you would do for a business card. Whether you should be taking actual or mileage will depend on you, depend on the car, depending on how much you're using it, depending on your whole financial situation when you're taking information for your taxes. So whoever is working with your taxes, that's something that they need to do. And it shouldn't be H&R Block that's doing your taxes. You need to have somebody with a real estate, it's your company. It's not as simple as a W-2 slapping information on, you need somebody that's analyzing your stuff, making sure that they're looking at your things from year to year, quarter to quarter, or even, semi-annually and things like that to maximize what it is that you're doing, how you can deduct things from your taxes. If you're growing your real estate business, and it might be a potential to be thinking long-term, what your plan is long-term. So you need to kind of understand where you're going. Like I said, if it's a business or a job, businesses grow. Jobs are just jobs. You grow in the job, but they're not growing. So you need to understand which one you have. If it's just a job, then you probably just need someone to maximize your deduction on your taxes, and that's it. If it's a business, you need to more than maximize your deductions. You don't want to always deduct everything in the kitchen sink if it's a business, because nobody's going to want to buy or be in part of your business or be long-term planning with your business if your business doesn't look good on paper, or even if you intend to get if you intend to get leverage the business for something. If you're leveraging the business, even if you're leveraging the business to buy your home, if you're not making any money on your business, who's going to give you the money to buy a home? So you need to be thinking of all these long-term things. And there's also ways that you can maximize your profitability and minimize your taxes. For example, you guys should be thinking about retirement accounts. You should be thinking about self-employment retirement accounts if you're a single member LLC that's filing a Schedule C on your tax return. You should be thinking about Roth IRAs, you should be thinking about regular IRAs, you should be thinking about retirement. One of the things that I teach on my YouTube channel is soon as you start working, you should be thinking about retirement. I don't care if you're putting $10 away. You need to start putting something away. I talk about in my videos, I talk about on the Modern Savvy CPA, I talk about goal pots. I believe that when your savings, first of all, your savings should be at the rate of inflation or above, or else you're losing. Because if you're saving $1 today and inflation is really high, it's only 75 cents down the road. So what does that mean? That means that if you can buy for $1 today, with inflation being as high as it is, that's going to cost $1.50 later. So if you save $1 today and it's still $1 later, you've lost 50 cents because the power of that dollar is less. So you shouldn't just have money sitting under the mattress, number one, or in a savings account that's not earning any interest. So whatever goal pots that you have, I believe in saving for a purpose. So all of my money that I have a designation. And anything that I speak to you guys about, or what my passion of is tested and approved by me or by clients that I have experienced it myself. So everything that I have has a designation to it. It might be a temporary designation because I'm not sure what I'm going to do with it yet, but it all has a designation. If I have money in college fund, I've or even broken down my college funds for my kids to tuition and housing, and it's invested differently. You know, I was able to use some of the money from my son's college fund to buy him a condo when he went to college, and that's saving up his birthday money from when he was little to now when he used to give me his birthday money, like, Mom, put this in my college fund. Then they got to a point like, Mom, I want all my money. So you know, every dollar counts. So nothing is too small. A lot of us think like this, like we have this big goal and we think we're gonna get there in 3 hacks. Like, that's what Instagram tells me. I watch all these things on Instagram and they're like, and get into an LLC in 3 steps, or do this and this 3. It's not like that. That's not the real world. It's like telling you can lose 30 pounds and then you binge eat and you gain 50. So you have to think long term. You know, when you're thinking of finances, you have to think long term. Financial wellness is just like physical and mental wellness. It's something that's a part of your life. You have to make it a part of your life. You have to have the right money mindset. You have to have that in your personal life and in your business aspect. So the second thing that we talked about was the car.
Yeah.
Right?
I was just gonna ask you that.
Yeah.
So so as the leader here and somewhat of a real estate leader in general, that question, can we get in the weeds a little bit about the car thing? So I get asked a lot if like by agents, if I recommend leasing or buying, or like how to take that deduction. Like what have you seen for your clients that are like 1099 type commuters, like real estate agents are, leasing versus buying, like taking that deduction? What's the answer there?
So that's a fully loaded question. And I have not done my video on leasing and buying in general because I do want to be able to do an actual case study on it. Because I want to actually compare the numbers. And I will answer your question, but I'm gonna have you wait.
Okay. Can I give you the like 9 times out of 10 it's this scenario? It's usually an agent that is making between 50 and 100,000 a year. They are usually just getting into real estate. And in our world here, our agents don't have a lot of expenses because we cover everything. So they don't have like the photography and the marketing and like all of those expenses. So most of their take-home pay is their take-home pay. They have like their licensing fees and things like that little stuff, but not like the big fees. So when they just have started out, their car usually has taken like a nosedive, or like they get a big paycheck and now they're ready to upgrade their car. And so that's like when the discussion usually comes about. It happens all the time. And then it's usually if it makes sense to buy or to lease.
So I still is a loaded question, and it just kind of depends.
Yeah, no, I'm saying if you're doing a video thing on it.
Oh, you want me to? Okay.
Yeah.
I
that
will.
would apply to that exact scenario would apply to so many people.
Yeah. I get that question a lot from more than a real estate business owner.
Mm-hmm.
I get that question from lots of business owners.
I think the issue with the question too is also that that this is uncharted territory for the agents in terms of their taxes, because they haven't had the tax year end yet. So they don't know, like they're in the process of hiring an accountant, for example, but they need to make the new car purchase or to make a car adjustment, like on the fly. Usually, I mean, real estate is no joke with how many mileage you use. Yeah. So it's like, do I replace my transmission or get new tires? Is this landing for you guys? Yeah, right? It's like, do I buy new tires or do I get a new car? And in the Palm Beach area, what you drive sometimes matters. So getting a new car, but they haven't had the tax year yet. Does that make sense?
It makes sense.
So
So do you want me to
like
spend
a
more time on
bartender.
that? You guys want me to?
Would that answer be helpful to you guys?
Would you guys want me to spend more time on that than go over some of the other stuff that I have on here? Okay, so this is gonna be geared towards you guys, what you want to, so.
It's usually they're leaving like a bartender or a teacher or a nurse or a role like that. And so their income situation is just entirely different now.
So I want you guys to think, yes, the car is a big deal. leasing and buying is totally in my opinion, it starts off with your mindset first. I personally don't like leasing cars because I think, first of all, I never want to worry about my miles. Although I don't really drive a lot, I still don't want to have to worry if I want to drive somewhere that I can drive somewhere. In today's society, I find years and years ago, there were no money down leases and it was half the price of the actual car payment. And it just kind of, when if you're comparing dollar for dollar, it would be worth it. So you yourself have to do an analyzation of leasing and buying.
Yeah.
How much miles do you drive? You know,
Usually leasing for real estate agents, leasing makes a lot of sense a lot of the time because you have the ability to have a relationship with the dealership where you can drop it off and they'll give you a loaner. It's like an end-to-end like
well,
process.
all like I have a Lexus RS 350. They do that for me.
Yeah.
You know, so it just kind of depends on what it is. I mean, if you can rent a car for $200 for a day, if your dealer doesn't do that, as opposed to the actual cost of the lease that you're doing. You know, like in my family, I am the only one that likes to buy my cars because I like to have not have a payment for a few years.
Sure.
My sisters, they by the second year of having their car, it's like an underwear. They are ready to change it. And
Yeah,
I
so
have two
assuming
of them like
assuming
that.
they have their personal lives figured out, like with like buying or leasing, assuming that they know what's what. The lease payment, like so if they give the dealership a down, let's say the lease scenario, they give the dealership a down payment, let's say it's $2,000. Is that $2,000, if they use that car for work purposes and also personal purposes, can they count on that being deductible?
A percentage of it, yes.
Okay. And
The
then-
the leasing, a percentage of it would be deductible on an annual basis, but so is buying a car.
Yeah.
With buying the car the first year, right? When you're buying a car the first year, if you're at the end of your year, you get a special, depend on the type of car. So if you're buying a car that is more than 6,000 pounds, which is normal in these days because we're all about SUVs, then you are able to have a beneficial deduction, which is accelerated depreciation on the car, which you can deduct all at once. So if you're in a tax situation at the end of the year because you didn't plan the first year, that's a way for you to save a whole bunch of taxes because you can depreciate most of the car in 1 year, if not all. So as opposed to leasing, if you're leasing the car, it's like rent. You know, you're able to deduct that payment as you pay it. So that's the difference with the tax wise. The actual financial reasons, in today's society, I personally noticed that the lease payments are a lot higher than they used to be.
Yeah.
So does it make sense financially for you to lease or to buy? Yes, you can get a more luxurious car. And it's all about aesthetics sometimes with a real estate agent when it comes to cars. So you can get a more luxurious car if you lease because you're gonna be paying that payment all the time.
And then if you have a lease, do you track your mileage?
You still have to track your mileage no matter what kind of car you have.
Yeah, so if you have a lease, you're tracking it anyway for your lease purposes, but is it more beneficial does the actual versus mileage, does that apply to a lease too?
It applies to a lease, but you have actual versus, it applies to any car, but it's actual or mileage. You can't be switching back and forth.
Got it, okay.
So
So you're tracking your mileage anyway as part of.
you still have to track your mileage regardless. No matter
You're
what,
doing actual?
yeah, whether you're doing actual or you're doing mileage.
Oh, I see what you're saying.
You
Okay,
still
got it.
have to
Okay.
track your mileage, because you need, especially if your car is being used for both personal and business.
Got it.
Because you need to know what percentage of the car is business.
Got it, okay.
And then if you're ever audited, you need to prove that.
Yeah, got it, okay.
So that's something you should know. I use my calendar, so my calendar tells me everywhere that I'm going, what I'm doing, and things like that. So, but there are apps that you can use to track your mileage.
The best app for that. Mile IQ?
Yeah.
It's Mile IQ.
it's-
It's worth paying the fee for it. We've been using it for years.
Yeah.
I love my life.
Yeah.
Yeah, so you can use that, you
Okay.
know.
So so for the car thing, so if you're trading one in and you're taking, like, let's say that they're giving you, let's say the down payment needs to be $5,000, and they're giving you 3 for the car, so you're coming to the table with 2. Is that $3,000 that they're giving you back for the car, like, can you do anything with that?
No, there's a special way that you record that in your business, but that's your down payment towards your new car, but you can't deduct it again because you've already deducted it already.
Okay, like if you're coming from being like a teacher where you haven't touched your.
Yes, then
expenses.
yeah. If you
Um,
haven't deducted it already, then it becomes part of your car
Okay,
incentive.
and then for the home office stuff, so they can write off, so in an environment like this where they have dedicated space again, right, like when they have supplies and things, they can still write off like a dedicated printer and supplies and a computer that they're using for work, right?
Yes, because they are independent contractors.
Right.
If
But
they're
they're being provided workspace here.
yeah, but they're still independent contractors. If you're paying them on a W-2, then no, they can't deduct that.
Okay, but if they're 1099,
If
it
they're,
doesn't
if
matter
they're
what
independent contractors, which is 1099, then they can deduct their expenses.
Okay.
One of the things that I want you guys to think about when you're thinking about your tax situation at the end of the first year is it's also a time for where you can look at putting away money for retirement if you need additional tax deductions.
Yeah,
So opening a SEP, putting away, a SEP has to be opened before the year ends.
That's
It
a
doesn't have to be
self-employment.
funded. It's a self-employment retirement account.
okay,
And it has to be open before the end of the year, but it doesn't have to be funded before the end of the year. With Roth and traditional IRAs, they need to be funded by April 15th, no extensions. So that's, with a SEP, you have a little bit more leeway. You also have a little bit more leeway as to how much. It's usually 25% of your net income, or if you have an S corp, 25% of what your wages is. And that is fully deductible on your business books. So it's like taking money from one account and putting it into another account. It's 100% yours, but it was deductible off your tax.
free money, those
My
are the,
SEP account was.
yeah, free friggin' money.
That's one of the
let me
best
step back this a bit.
tax planning tactics
Yeah.
that you should be using instead of spending $50,000 on a piece of equipment that you're gonna leave in your garage, because a lot of clients are like, I don't wanna pay any taxes, I don't wanna pay any taxes at all. So they buy something and they leave it somewhere and it's not worth anything. I'm like, okay, the next time give me the $50,000, I will pay the $30,000, the 30% tax on it or whatever, and I'll keep the rest. Because I'd rather keep 70% than waste 100%.
Yeah.
So you have to have the right mindset. You need to be smart about what you're doing.
One thing
You
that
need
we
to think
run
about
into
it.
a lot, guys, is we work with so many in this area in general. We have so many people that are finance pros and finance people that will like get in your ear about like taking this deduction and doing this. Don't like. I think the takeaway for me has always been just don't get tricky with it. Spend what you spend, keep track of it, use those deductions, and hire a professional. Don't get tricky with trying to like I think it's a big mistake that agents
To
make,
smart the
especially when they
system.
have like a client who's in finance and they're like, what you should do is you should set up this escrow account. Like, don't get tricky, because our job shouldn't be, like, we shouldn't create a full-time job for ourselves to like manage our own money, right?
Right, that's not your expertise, right?
Exactly.
So, you
That's
know,
actually, and you missed the very beginning of what Sherron said, but that is literally like the first thing that she started.
Oh, really? Oh, I love that.
Yeah, so I love that you're like doubling back on it, because it just, I mean, not that everything you're saying isn't totally valid and validated, but you literally just validated like her first
Oh, I
sentence.
love that. We're on the same page. The other thing is, I'm not much talking about this, but because everyone here is fairly new to real estate, do not make the mistake of not being aware of the fact that you have to pay taxes.
Yeah.
Did you talk about making quarterly?
I have not talked about
Did we mention
estimates
that?
and quarterlies yet. So, that's actually on my list, but I'm not gonna even go through half of this. I'm just gonna answer you
I'm kind
guys.
of freestyling this based on like.
That's
what I know
alright.
today. Yeah.
Most of the times that I do talks, it's always, it's freestyle. I usually leave the questions until the end, but this is a more intimate and
Let's do the quarterly stuff because I know that that's like, we have, again, these agents that are, like, I know that it was like this for me, like I got my first check and it was like, how do I give this money to the government so I'm not like, because I think everyone here, for the most part, is very aware of, everyone here for sure, but for the most part, everyone is aware of the fact that you have to pay taxes, right? So what's the best way to do that?
So a lot of the times, and I'm just gonna assume some of these things right now, a lot of the times you guys are coming from jobs where you weren't independent contractors, you were wage earners, so your employer was automatically taking your tax out before you even got your paycheck. So your gross check was your gross amount was very different from your net amount. So you have to think along those same lines when you're thinking about, taxes when it comes to you being an independent contractor. So you definitely need to do a few things. You need to, one is set up an EFTPS system with the IRS, okay? So you can automatically pay your taxes.
Can you say that again?
EFTPS. So that is the online tax payment system with the IRS. So you need to either if you're an independent contractor and you're a Schedule C, then it needs to be in your name. So you need to set that up. If you're an S Corp, it gets a little more complicated, so I would have to, that would be payroll, and we would have to talk a little bit more about separating payroll and things like that.
For
So,
EFTPS, you can do that as a solo
yep.
1099, right?
You want to be, when you are a small business, most of the taxes that you pay for yourself is done at the individual level. So regardless, like say for example, I have 2 businesses, I have a couple of rentals. All that information is worked on like we have an LLC that me and my sisters have. That done there, I get my K1 with my income from there. My S Corp, I get my K1 with my income from there, although I'm also a employee. S Corps require you to be an employee of them. I get but all of the income flows to my individual tax return, and that is where your bracket is. So your income could be coming from 5 different places, 5 different companies when you're a small business through K1 or W2. But it all gets launched at one level, and that's where the real tax planning is, because that's where your bracket is determined. Because I could be getting income from my S Corp that's $100,000, from my rental that's maybe $10,000, from my broker another maybe $20,000.
But for you guys, you're getting paid from one source, so set up your EFTPS, it's the electronic funds transfer.
Yes.
Like it's basically so you have the ability to pay the IRS.
And on a simple level, and please correct me if I'm wrong, on my LLC, like in my head, I know that between 30 and 40% of what I make, I put away, because somewhere in there is the amount of taxes. So that's like a very simple level. So every paycheck I get, 30 to 40%, I don't even look at it. I don't even consider it like spendable money, because I know in my head that that's going to tax. That's a very basic level. Do what she's saying, but in your head, if you want to like
The mindset.
If you want the mindset, mine is 30 to 40%, and 40 is aggressive, right? It's usually
40 is aggressive depending on your bracket, but like Hallie says, if you think 40, you have extra in that account.
And that's
You should
why
have a separate savings account that can go in your
Also,
retirement.
They don't have the expenses again that a 1099 normally would have. So 40, I would put 35 to 40% away, like, because you're already, like your splits are already taking into consideration, like what you pay the team and what you pay the company out of your split is really covering all of the marketing expenses that you typically do, like your signs and your business cards and like all the photography, like all that stuff I'm writing off as the business, you guys don't get to, which is why what you're taking home is really what you can consider it to be, aside from your maybe a new laptop, you know, does that make sense?
And also, guys, just to be clear, I'm not talking about my salary at Mayor Lucas. I'm talking about like my side hustle business that I
Yeah.
do. So I want to.
And that's why I jumped in, because you also have expenses as part of that, like you can deduct so many things as part of that.
But she's being aggressive in saving, so if there's anything
Yeah.
extra, it's just a bonus, so.
I've had this happen with so many agents in the past that I know that they're like, well, you know, like where they've tried to take a write-off, so they want receipts for like.
That's why that was one of the, and again, you just validated Sherron's point, which is why she said, at the beginning of this, have a dedicated credit card and have a dedicated business account, so that at the end of the year, when you're doing your taxes, you got everything accounted for you already. If you're
Like out what
bad
you
at
can
keeping
too,
track of things.
like out what you can, like with, when you guys host an open house and you're grabbing like cookies that I'm not providing for you, like that kind of stuff, like all, like the crumbs really do add up to all that.
That is why having a dedicated business account and a dedicated credit card
Yeah.
is important, because those crumbs do add up.
Okay, so-
You're not thinking along those lines.
Okay, so because you guys are smart humans, I'm gonna let you guys really like figure out how to do the EFTPS and like got it, check. quarterly to the IRS, do it, send it money. Okay, so what about food throughout the day? Like, are you allowed to expense, like when they're out, let's say let's say she showed up here for a training, she had breakfast at her house, she's gonna leave here and grab a coffee on her way to a showing in Boynton. In Boynton, she's gonna grab lunch while she's there doing showings, and then on the way back, she's gonna have dinner on the way back. Is any of that
So food is a very, very, I'm gonna sit down for these conversations, because this is a coffee chat, which maybe I should have grabbed my coffee before.
Do you want coffee?
No, I'm good
You
for
sure?
now,
Yep.
yeah. Afterwards, how about afterwards?
How do you
So
like it?
cream, 1 sugar. So when you're thinking about your food, you can deduct your food that you are spending on, to the point where your whole team is eating. Your food that you normally would eat is not deductible. So your coffee in the morning, your lunch by yourself is not deductible.
So even
But
if it's away from home,
even if it's away from home,
okay.
it is not deductible. It is not something that's ordinary and necessary. When you're thinking of a business expense, it has to be ordinary and necessary. So the thing that is deductible when it comes to food though, post-COVID, so if you haven't done your tax return, if you haven't done your tax return yet for 2022, food, meals were 100% deductible, for 21 and 22 for COVID. I think that they were trying to get with the, better with the restaurant industry and help the restaurant industry. So after 2022, in 2023 onward, it is only 50% deductible. So meals are 50% deductible. If you are going out to lunch with your coworker and you're discussing business. So you see, the thing is a lot of our business life is incorporated and together with our personal life these days. So you have to have that mindset. You have to understand your business mindset. What am I doing? Am I going out with my coworker and are we discussing A, client B, client D? Is that this is a business lunch? Then that's deductible.
Yeah.
You know, so am I taking my accountant out? You know, that's a business lunch. You know, am I taking my so and so out for drinks? You know, you have to think. You have to have your business mindset.
For a client.
If you're picking up a coffee for a client, that's
100%.
that's 100% business.
Yeah.
You know, so with the food, you have to kind of understand and think about it. If you get audited, you know, like I always tell my clients, they're like, oh, I've been deducting this for 30 years, or I've been doing this for 30 years. You can do whatever you want. The IRS has returns that are signed Mickey Mouse for 30 years, and it's not Lord Donald Trump for 30 years, and they've never looked at it, right? So, but once they look at it, can you back it up? If you can't back it up, that's just the one time that it takes for it not to be an.
One of the reasons why we use the calendar incessantly is
Yeah.
because of that. So when you're it's so easy if the IRS is like, yo, what happened here? And you're like, you search your calendar for that year, you can export your entire calendar. Everything that I do was on the calendar for that reason. It's
Didn't I
like,
just
I
talk
see
about
it.
the calendar too? She's like echoing everything that I talked
Sorry.
about.
Sorry.
No,
It's
that's
honestly, I've been doing
awesome.
this for almost a decade. And
No,
the
that's
questions
awesome.
that I get, it like breaks my soul when new agents ask a question after the year.
Yes.
Because it's like, I could have told you this in December, we could have
Right.
made adjustments.
Right.
And also, it's a scary thing when you get that first tax bill and you're like, what the hell? Like, it's a big, even if you make $30,000 cash, especially in our organization, that $30,000 is really more like $20,000 to $18,000 because you guys don't have the expenses that, like, to write them off. So the advice that you're getting from Finance Pro isn't as applicable, or your environment is unique that way because they are technically 1099, but it's different.
Well, going back to that, anything people tell me, oh, well, I'm only making $50,000. How can I live on that? Or how can I plan on that? Or how can I build my wealth on that? It's all about your planning. It's all about your journey. What someone makes, and I do tax returns for a living, and I've been doing it for more than 2 decades. I see what people make, and I see people making $75,000 all together, husband and wife, that send their kids to Ivy League, buy their own house, have a nice car, go on a vacation once a month. And then I see people who make $200,000, $300,000, $400,000, $500,000. and they don't have, excuse my language, a pot to piss in.
Yeah.
So it doesn't matter what you make, is how you're planning that. So, you know, if you plan for taxes, it's not gonna hit you at the end, as bad as at the end. And if you plan aggressively, you take the rest and you put it into your retirement account. You take some of that, and if you're wanting to get your own house, you wanna have a housing pot. The one pot that you always need to have is a retirement pot. Once you're working, you need a retirement pot. Whether it's, you know, I believe in the pots. I have, like I said, every penny I have a designation. You know, if it's just an emergency fund, if it's a vacation fund, if it's a car fund, if it's a house, and your pots are gonna change as you go along.
It's hard for new agents to do that, and it's not lost on me why you're saying it, but it's because they don't know how much do you guys think you're gonna make this year? Don't say the number, but like, are you confident in how much you're gonna actually end up with this year? Are you unsure about what that number's gonna be? And the biggest reason is because the phone could ring with a $3 million week that might make you $60,000, right? Like that happened to you, you know? Like you might make $60,000 this year, or you might make $6. You know, like it's real estate's hard. Your first year, when you get the hang of it, like Caroline and Harm, like can budget pretty much the penny how much they're gonna make, like just knowing what bandwidth is, whatever. But you guys don't have that luxury. So being really, really diligent about where you're spending your money and where you're investing your time too. I think that one thing that agents do is they'll spend a lot of time building out a budget, and then the budget is based on like the first 2 closings that they had, and then they don't have one, and then it's like, well, everything gets out of sync. So I wouldn't worry. You guys are smart. You guys are savers, and all of you are hustlers. Like most of you have come from the service industry too, which is like you know what it's like to save money. So I wouldn't put too much stress in your first year or two on really like delegating each penny. Now after that, when you can, yes, for sure. But for now, like I think, like my biggest advice is to focus on making sure the IRS is paid. Like, and then with the rest of that, earmarking it as you go. Does that make sense? Does that align with like where you guys are financially? Am I off?
Well, delegating each penny is not on the business level, is what your amount that you take home, okay? So I'm going one step further.
Yeah.
I'm telling them to delegate their pennies for what they have left. The
But
business.
What I'm saying is that our team is unique in that they have expenses for sure, but it's not like most 1099s or businesses because the company
Yeah,
takes care of
you do,
so it's
yeah.
like what do you guys expense for your phones, your insurance, your food, your car, gas, equipment?
Thank you.
What else? Yeah, business, what else is there? Big expensive.
Well, your home office would be one of the things that you do. The car is, for real estate agents, the car is one of the biggest things because sometimes we live in it,
Okay, so
right?
tell me about this. Yeah, actually.
Gonna be getting clothing.
Clothing. Okay, tell me
Yeah.
this. Clothing. So when you go from being a bartender to a real estate agent, there's a clothing like purchases that need to happen.
So clothing is technically not something that you can deduct if you can wear it for other things. If it has the company's name on it, then yes, it's something that you can deduct. But you have to be very, very careful with clothing, because it's not, in today's society, it's more like, I wish that I can deduct all the dresses I've been wearing on my podcast, but I can't, because the dresses don't say Modern Savvy CPA on it here, and I can wear it for something else. So technically with clothing, if you can wear it for something else, you're not able to deduct it within your company. It's a very risky situation. However, when you are looking at your stuff, and there are certain things that you're doing for specific things, let's say for example, you're buying certain clothing that you're only gonna use in a photo shoot, or you're doing a branding photo shoot where you have to do your hair and your makeup and all of that stuff. That is part of your business. It's ordinary and necessary. So that's something that can be deducted with part of your thing. I've learned about branding in the last 6 months, and it's an art. So that yeah. So So the things that you need to do to prepare for that it's something ordinary and necessary for your business. And with real estate, branding is a big thing these days. So that's something new that the IRS will not know how to handle when you start to looking at what it is. So it's gonna be something that you're gonna need to be very careful about, especially at the beginning. Looking at what it is, documenting when you're deducting these things, you know. So let's say you have a photo shoot and you have to do hair, makeup, you know, specific clothing for that, whatever it is that you needed to do for that photo shoot, and you're gonna deduct that as your branding expenses, right? Make sure that you have that documented. So if it ever comes up to you and they're like, okay, why is this ordinary and necessary? You know why. You were able to say why. So when it comes to questionable expenses, it doesn't mean that you're not able to use that as an expense. It just means that you need to extra document it.
So to circle back to this, so you go to real estate and you need to buy some more clothes. That
That is not deductible.
Okay. Is there, so they can't take like
A clothing
an
allowance?
investment in their business? Like, is that like a investment in themselves? Like, there's no such thing as that?
Not according to the latest IRS rules.
If you're able to demonstrate that you don't wear those clothes
Yeah.
outside,
Maybe.
so this is funny, you guys, if you follow me on Instagram, you know this, like, I'm very, very specific when I post personal life things. I look completely different than I do. You guys know that?
Yeah.
Like, my hat is backwards, I'm wearing red jeans, like, it's very, very specific, right? For that reason.
Also, because you're influencer,
Yeah.
the rules there are a little bit.
Yes. It's
Okay.
you know, the social media world, the IRS have not caught up with it. So that's why I'm saying, what I'm saying here, there's no hard and fast regs
Yeah,
or revenue ruling or whatever, but I am sure it's gonna come up.
okay.
So that is why I'm telling you that if there is something that you believe is ordinary and necessary and you do want to deduct with your company and there isn't precedent for it,
Yeah.
document it.
Yeah.
You know, this is a new world.
So if they're 1099s and I'm saying like, hey, you need to, like, as, you know, we have our professional standards here to be a
Right.
1099 of this company.
Mhm.
And they need to buy $500 worth of work clothes, that is a stretch for them financially to begin with. Like, is that $500 to be an agent here? If it's in my handbook.
There is
then
no
it's-
hard and fast IRS rules that says that can be deducted.
Would it be helpful if I had in a handbook, so like in writing somewhere that our 1099s, the expectation is that they are wearing professional attire?
You would have to do that if you work for, what the IRS would come back and say.
No, I'm
Is-
trying to figure out a way to like help their.
I
case with
understand, but I'm trying to be, I'm being the devil advocate,
Yeah, for sure.
right? I'm not saying no or yes.
Yeah.
I'm just giving you the other side of this, of what the argument
Sure.
is. Because number one, the IRS is always 2 decades behind what the world is.
Sure.
So they should have regulations on these things, but they don't. So it makes it hard for the taxpayer and it makes it hard for the professional that's working on your taxes.
Yeah.
So this is where the situation comes into what, you know, ordinary and necessary and reasonable, okay? I bring in the reasonable on certain things because the things that we're discussing now is not something, this is all new. In the last 5 to 10 years,
Yeah.
this is all new. The IRS will tell you that if you go work for Merrill Lynch as an employee, you're gonna have to present, your aesthetics is gonna have to be a certain presentation. You can't deduct that.
Yeah,
You
That's
can't
W2
wear
then.
makeup and nails.
that's a W2 though, so as
Nope.
1099 is it different? So even if my brand is like if I have
It-
requirements,
Your brand and your influencer and your whatever, that's a different,
I'm saying.
as a real estate agent, it's not your brand.
No, I'm saying in order for them to be a 1099 of this company, they need to align with the brand aesthetic.
That's the same thing that they would say, that if you go to work for Merrill Lynch or you go for work for Goldman Sachs, in order for you to be aligned with the brand aesthetics, you
So
can
even
give,
though that's a 1099 or a W2 and this is 1099.
it doesn't matter.
Okay, got it.
It doesn't matter.
Okay.
What you can do is you can maybe give them some type of an allowance for that and you can deduct it. But for them, it's not something that can be, if it's a requirement of your company,
Yeah.
you can allow it, give them an allowance for that can be deducted.
Got it.
And they can give you back receipts for that information. But for them, it's not something that is written that can be done. Like I said, going forward, because it's of the changing world, you have to be, you know, you have to look at the things, you have to be reasonable. You know, you're not gonna be able to deduct your entire wardrobe, but there might be things that is reasonable, that can be done. You know, I actually had a meeting with other CPAs the other day. There were 3 other CPAs, and this was one of the things that came up. You know, what is necessary these days when it comes to branding, when it comes to influencers. You know, this one CPA, she had 3 influencers as her clients. What are the things that are, you know, deductible? The IRS says that if the clothes doesn't have her name on it, it's not deductible. That's what it says. But we had to discuss what reasonable was, you know, because the girl that was the influencer, she donated part of her clothing line after she wore it. That was a way that she was able to deduct some of it as an
Did
influencer.
she get audited?
She hasn't got audited yet, no.
I'm really,
But-
really interested in this.
But
Like you, as you like move through this, I would love to like develop like a cadence with how this.
Definitely.
It's so interesting because
Also,
there's.
can I go to lunch with 3 CPAs?
yes, seriously.
How do we get in on that action,
Seriously.
Sherron?
To be friends with Sherron. So Hallie, you know?
Done and done.
Okay, what else? What else?
As far as
Permashwar, I have a
like-
question.
oh, okay.
Sure. Hi.
Hi, this is Alex. Is golf deductible? Like taking clients to play golf and the equipment and any of that?
So entertainment is seen, and the new tax laws when President Donald Trump came into office, entertainment became 0 deductibility. Before that, it was 100%, it was 50% deductible. But
Okay.
with that said, entertainment is not deductible. But there is something that real estate agents and small businesses need to consider that's not entertainment. I've never been a fan of entertaining my clients. I've been a fan of doing a lot of advertising and promotion with my clients. So for example, if you buy a box at what is the amphitheater that's next to us? The South
I think-
Florida Fair
yeah.
thing. And you have your sign on that box. That is no longer entertainment, it's advertising and promotion. If you have a golf membership, right, and you're doing a sponsorship with that golf thing, like let's say the golf place has a magazine or you're advertising somewhere on there or whatever, then that's advertising and promotion. So you have to think along the lines of what is advertising and promotion and what is entertainment. Like I said, I'm not a big fan of entertainment. I don't like to entertain my clients.
So if you take a client in our area, because we're real estate agents, and their home purchase is dependent on their ability to navigate the golf courses here, and they have an awareness of it, is that, like, as part of the house hunting process, could that be argued?
That's still entertainment, it would be considered. It can be argued, but it would be an argument.
What if you wore Myra Lucas hats the whole time? You're advertising.
Yeah, you're wearing the hat, but when you could advertise the hat.
Okay.
You know, you can deduct the hat.
Right.
If you rent a golf cart and put the company's name on the golf cart as advertisement and drive it around the court, then that's advertising and promotion.
What's the other bucket that would be,
Holly's like, all right, adds to list, buy a golf cart.
permission granted?
Just the magnets for the sign.
What would be, is there like a cost of doing business type, bucket, for like the cost to get a deal done? Includes giving them access to a clubhouse, for example, or like a round of golf within the community where they're buying.
Mhm.
Is there something like that,
There isn't, but that's one that I would argue. So there are in tax, there are gray, and there's white and black areas, and there's a lot of gray.
Okay.
That is why you need a professional.
Or I guess a better example is, because golf is, but like if you rent a boat so a client can see the property by water. Like,
Then
so that
that-
they can actually see the property.
Well, then that is part of ordinary and necessary to do that business.
So is it like a what's the word? 'Cause it's not entertainment then, right?
No, that's
What-
not entertainment.
what would that be
That's,
called?
that's
Like
transportation.
Oh, okay.
You know, if you have to rent a plane to do an overview of
Yeah.
something, then that's transportation.
Yeah, got it. Okay. So there's not a tag for that. That's like the cost of doing like a deal, like the cost of getting the deal to the finish line.
No, there are some, you know, it could be, it wouldn't be networking, it would be, you know, it would be cost of goods sold. So,
Yeah.
that's what I would call it,
Okay.
you know, like, it's the cost of doing a deal, you know,
Yeah.
deal
So
expenses. or-
hard hats purchased as part of because we need to go into a new building. So and they can only be used for like that's what I'm like. What's that like bucket of like thing for like the like to so I guess it's cost of goods sold.
Yeah, so it's the cost of doing business, so it's
Yeah.
ordinary and necessary. It's ordinary and necessary, it's necessary for you to have a hard hat to go into this business. Are you a construction worker that uses this hard hat all the time? Then that's also important. A hard hat is not something that you wear as, you know, part of your,
Yeah.
you know, thing, so that's, you know, you don't normally rent a plane to, you know, if you have to rent a plane to look at the overview of a land, that's the cost of doing the deal.
Yeah.
You know?
Okay.
So, the parts that are subjective, when we talk about the clothing part, and we talk about the part that you're talking about, you can clearly see the ordinary and necessary of that.
Yeah.
Maybe one day they're gonna make clothing part business on part, like the car, right? The car is a big thing, that's why you do need to track your mileage, cause they can, that's a flag. You know, there are certain things that are flags, but that doesn't necessarily mean I'm gonna tell you not to do it.
Yeah.
I'm gonna tell you that you need to back it up.
Yeah.
You know, like, I've taken positions on tax returns, especially for builders, that are very, very risky positions. But, because they're risky because there's no hard and fast black and white rule for it.
Yeah.
But I will do my research, I will check on what the law, the IRS law says. If there's nothing clear in the law, I would look at cases that has been tried in tax court, and I would back it up. So I have all my backup, and I'm like, okay, I've done my research on this is what I think, I tell my client, if they're comfortable with it, we go with it. So if we're ever audited, we are comfortable with what we have.
Yeah.
You know, so I sleep well at night.
Yeah.
When I don't do the research afterwards, I make sure that whatever I'm doing, I have a backup. So
Yeah.
it makes me very uncomfortable if I'm just ducking everything in the kitchen sink for a client and they get audited and I don't have, you know, I have no backup for it.
That's the
So-
accountant that you want. You don't want the accountant that's like, I'll say, it's like, just don't get tricky with it. If it's genuinely, like buying a round of hard hats for a client so they can walk into a building is like part of doing business. Getting a boat rental so you can show the Rufanos the dredged out canal is part of doing business. Like it genuinely really, it's like
Buying them
Yes.
new clothes after,
buying new clothes because you have to
because
jump
I
in
had
the.
to throw them in the water.
Yeah. True story. Okay. What
Buy your Lucas t-shirts for
What?
everyone.
yeah. What or the sweatpants we'd buy for Amaret. Do you remember that?
Yes,
Oh, I like
that's right.
What do you recommend agent who is a new 1099, was a teacher before, W-2 before, being a PA, an LLC, how should they be set up? 'Cause
Okay.
save this for
So
last.
this is a really good question also for any small business that is starting out. So my recommendations, and remember, I am recommending, so these are my opinions, right? My rules that I have within me. You can, you know, these are all opinions. So Sherron said this, yes. Is this the IRS rule? No. Okay? So my recommendations is that anytime you start a new business, whether it's a real estate or it's any type of a small business, you start off with an LLC. An LLC is an undefined entity, and it's disregarded for tax purposes if it's a single member. So by default, it is a disregarded entity. It is the least expensive way to start anything. As your business grow, you can define your entity, your LLC, in different things. It could be an S corp. It could be a partnership if you have more than one member. It could be a C corp. It could be disregarded continue being disregarded on your tax return. But to start off, it is the simplest tax vehicle that you can use. But if you notice that you're making a lot of money and you want to invest in, there's combating to an LLC. An LLC, all of your income at the end will be self-employment income, which it is according to what we're talking about here. Or you collect all the, you take the brunt of the expenses for them at the beginning. So you want to make sure that all of your income is self-employment. So what does that mean? That means that at the end, you have federal income tax and you also have to pay your Social Security and Medicare. That's what a single member LLC does on your tax return. And for all intents and purposes, that's what you guys are.
So when they get licensed through DBPR, they're licensed under their legal names. And then they have the ability to be paid as an LLC. Have any of you done that yet? Are you a PA or an LLC?
I did LLC.
So are you, if I look on DBPR under your name, are you?
I have to transfer it because I was waiting for, I did the LLC, then I got the tax number, so now I have to reach out to DBPR to connect the names.
Okay, got it.
But I haven't done that yet.
Okay, as you do that, will you keep Hallie in the loop on how like labor intensive that is? This is one of the areas that I get questions about constantly. If being a PA, the way that the real estate licensing like works for this, someone told me once that being a PA status, if you're a single member LLC, that's your only business is that you're a 1099 of Meyer Lucas, like you're not doing any other side hustles. Does it being a PA and an LLC, does it serve the same purpose?
So a PA is a designation, and usually it's a corporate designation,
Mm-hmm.
right? So you're a corporation when you're a PA. Usually that's how it is.
Mm-hmm.
I mean, I'm not an attorney, so I can't give you the hard and fast rule on that. But that's just my experience with it. So with a corporation, if you start off as a corporation, you're a C corporation, and you have to elect S status.
Mm-hmm.
So S status is a small business corporation, and that's when you're not double taxed first and then taxed again. So that's what a PA is. With an LLC, like I said, it's undefined. So when you're a PA, you automatically will have, and you're a corporation, you have to file a separate corporate income tax.
Mm-hmm.
Then you definitely need to have a separate business bank account and a separate business credit card, and you need to not pierce the corporate veil, because you can lose corporate status if you're not doing that properly.
So for your purposes, so you filed your LLC, you got the EIN, you open a business bank account,
Yeah.
and then you file with DBPR, and then you tell Compass to pay you that way.
Yeah.
So,
Mhm.
right,
Yeah, I created a business bank account with the LLC, and I did that Compass like registration to link to that bank account.
okay, so this is what LLC, but the money within Compass is still going to someone named Nicole.
Well, Compass should have you do a W-9 form, because you probably did a W-9 form at
So
the
they
beginning.
can't do that until this is where things get out of sync with each other, and so I'm asking from an account, like, she can't do that yet until DBPR acknowledges that she's that LLC.
Right.
So if she's getting paid under her business account as her person, does that matter as long as it's happening within the same calendar year?
No, so,
Hold on,
So,
sorry.
there's a way to work that on your tax return where she might end up getting 2 1099s from Compass.
So I think at the end of the year, they'll give her one as the LLC,
And the other, they will give her one?
as just one 1099 under the LLC, as long as she does the DBPR thing, and then Compass,
So
and
then
they'll
she
just
wouldn't
switch
have any
it.
issues.
So does it matter that the money was coming in as her personal name into
No.
the business LLC business account?
No, it wouldn't matter if the 1099 is all under the LLC.
Yeah, okay, so you would go by what the 1099 says and what her bank statements say, and who the check was written to doesn't matter.
No, because if Compass is,
Like they're reporting, they will
Yeah,
at the end of
how
their
they
report-
report it matters.
Yeah, so if they
Okay.
report as just her LLC, then the
Yes,
rest of it is
for
paper.
tax purposes, if they're reporting it on a 1099 with only her LLC,
Yeah.
then she's fine. If something happens where it gets reported half on her 1099 and half in her own name, there's a way to work that on your tax return. You do like it's called a you know, an in and out, and then pour everything into your business, that your tax accountant should be able to do that for you,
Okay,
to make things simple.
can you take this on and ask, just clarify with Sarah Collette, that when you move to your LLC, so GBPR has to acknowledge it, then they move you, then they pay you as that, right? But you've been taking money into your business account, just explain to her and ask her if Compass ever issues two 1099s for both entities. This is something that I've always been so concerned for you guys, like that you're gonna, like you fuck something up there, like where you're not filing. Yeah. Where is that?
My understanding is that, yes, you should sort it out with the DBPR and make sure you have your business account set up under your LLC, et cetera. However, when it actually comes down to filing your 1040, an LLC and you individually is one and the same.
Well,
is that true?
If you're a sole LLC, is what happened with CPA, it all flows into one. You can be filing as Harmeyer or Harmeyer LLC, it all flows into one, it doesn't matter, and they will only issue one 1099.
that's not true.
Well, that's what I was told.
It's not true that they will only issue one 1099. Compass doesn't know what your LLC is. It's an undefined entity,
Yeah,
okay? They're required to, there are LLCs that are S corps. There are LLCs that are C corps. There are LLCs that are partnership.
Okay.
You don't, the company that's issuing you the 1099 do not know. So if it's a different tax ID number,
Yeah,
then it's a different 1099.
that's what's happening. Okay, so this is what's happening here. So
Okay.
she's being paid right now under her social security number.
Right, so that's why I asked,
Yeah,
will Compass issue her one 1099?
yeah,
If they issue her one 1099, then she has no problem.
yeah.
If they're issuing her two 1099s, then she will have to do a nominee thing on her tax return.
Okay.
Going back, sorry, what was your name? You didn't tell me your name.
me
Harm,
harm,
yeah.
Harmon?
no,
Harm.
like I won't harm you.
Harm, okay, good.
Harm,
Harm,
yes,
there's a misconception in what you're saying, but it's not all not correct, okay? But it's commingled in that situation.
yeah.
like I
at-
explained before-
At tax time, I thought that it didn't matter anymore, everything is a single, I'm talking about a single person LLC, is you and the same, it's all the same.
No, because
At-
there's an
at-
EIN.
In the eyes of the federal.
Okay,
Yeah.
yes, so let me answer that for you, let me clarify that information. So, a single member LLC, like I just said, is disregarded for tax purposes, right?
Right.
So
So
does
you
that,
don't
when you say
have,
single member LLC, is that what she is, so she has an EIN, you're paying, Compass is going to pay her EIN, is that a single, or is that
if,
still the same
if
thing?
she is registered as a single member LLC and has done no other election and does not have a partner, she's disregarded for tax purposes.
Correct.
Okay,
But it's an undefined entity. Your people outside do not know what your LLC is. Only you, and even the state of Florida, unless you do the amendment, doesn't know what it is. So sometimes people don't define their LLC until it's been a year that they've been working in it, because they don't even know what they're doing.
okay.
So it's customized, so it is disregarded for tax purposes, but when you are doing your personal tax return, it is a separate schedule on there. It does have your LLC's name, you need to put your LLC tax ID number on that schedule. You need to make sure that you're doing that, because you might wanna become an S corp,
Right,
right? What happens when you become an S corp and you have not separated anything?
right.
So you yes, it's discarded, that's why I
Yeah.
start off saying.
Do as we're saying, not as he does.
Like, as we're saying, you start off with a single member LLC, it is the simplest form to work with it. As you grow and get bigger, and you become more, you can define your entity differently as you move along.
Okay, so keep us in the loop on how this goes and keep her in the loop, because this is something that, like, when we onboard people, it's like this
Yeah,
question always.
I'm still learning, so yeah,
Yeah.
I'll definitely.
Okay, That
Okay,
was so helpful.
since we're going along with this, any other questions?
If you start paying yourself as a
I'm a PA, by the way.
So are you an S corp?
My accountant handles that.
See, that's
I
the
did
wrong
transition In the
answer.
middle of the year.
Yeah.
I don't even know why I did a PA. I saw another agent did it, and I thought that was the right thing to do, so I
Don't
did it.
ever do anything that you don't know why you're doing it.
Yeah, I know.
That's
Right
your
now.
one
Do you know what I
takeaway
tell
from
my
today.
children when they tell me something that they do something stupid? Oh, mom, I did this. Okay, why did you do that? I don't know. Well, what does mom say when you don't know why you're doing something? Don't do it. Ha! Okay.
I do have a separate business account in the PA name though.
Okay, I'm gonna give you kudos for that one. I'm taking you off the hot seat, Alex.
All right, thanks.
But you're temporary. You have one cheek on the burner.
Okay.
One cheek on the burner, one cheek off the burner. So make sure that you find out why you're a PA, what's the reasoning behind that, what type of entity you are. You need to, at least as a business owner, you need to know these basic questions.
Okay.
Because all of this matters. And it could make a difference, and the one thing that I'm a CPA, right? And I'm a tax CPA. But I was never a CPA that only did tax prep, and now I am no longer accepting tax prep clients because I don't have time for it. But I do a lot of consulting. I teach my clients. I believe that part is more valuable than actually doing their tax return. So, especially my business clients, I try to teach them. I give them lectures all the time. Like, the kids don't listen to me because they're like, their friends are always listening to me, but they ask them, why don't you listen? Because she's always giving a lecture. Yes, I am always giving a lecture. So the thing is I find, and with my search to find other CPAs to work with that's gonna do tax prep, because I will do the consulting and they will do the tax prep, is a lot of them don't do consulting or planning or tax or business planning because they don't have time. They're so busy doing tax prep that they're exhausted prepping, and they don't have time to spend with their clients consulting and coaching them and giving them the right information. So I can't blame them for saying that, they're not doing what they could be doing. They're doing the normal course of business. They're preparing your tax returns, and that's really all they have time for. They're
That's
already
some
working.
fire advice for business owners, because for us it's so challenging to find an accountant that can have a conversation like this, and then all is on the ball with the tax prep stuff, because it's a heavy lift. I think fire advice is having an accountant that you have as a consultant, and then having an accountant that actually is filing your shit for you, because those can be two separate. I never thought of that, having two separate people.
And that's why that's one of my goals this year is
That's
finding
smart.
a team that is going to take my tax prep.
Yeah.
So when a client, like a lot of people have contacted me since I started doing social media, and I at first I used to say, no, I'm not accepting any more tax prep clients. I've always been very selective in my clients anyway, because I do personal service with my work. I'm very passionate about it. But I felt bad turning the clients away. So now I have at least 2 CPAs that work with me that is going to do the tax prep when I do the consulting.
Smart. Can I ask you 2 more questions? So,
Sure.
One is, there's a write-off that's been trendy for whatever is paying your kids, as part of, so do you pay them as, if you're taking that deduction, do you pay them as a 1099 or as a W-2?
Well, there are different rules with if you're paying your kids, okay? So you have to think about it. This is this noise I hear all the time.
Mhm.
This is the number one noise, and if you ask me, the answer is it depends, and most likely it's not worth it, right? So when let's say you pay your kid $10,000, right? One of the reasons you want to pay your kid is because you want to start investing retirement for them. So you want to put Roth money away for them. So that's the reason I would pay my kid.
Yeah.
Is because I want to start putting Roth money. But do you have the $10,000 to pay your kid, number one? And do you have the money to put the money away for Roth, right? So this is not even a tax planning tool for you if you don't have money.
Yeah.
Right? That's number one. Number two is when you pay your kid $10,000, if you pay them as a 1099, you will know there will be issues with you deducting them as a dependent.
Mhm.
So let's say they're in college and you're able to deduct some of their college stuff. you're not able to deduct their college stuff if, although they might qualify because of the certain rules that has to do with 1099. So normal people, what they do is when they wanna pay their kids, they do a W-2 for their kids. But when you pay your kid as a W-2, let's say you pay them $10,000, you have to pay Social Security for that kid.
Mhm.
Social Security and Medicare is 15.3%. Are you saving more than 15.3% when you're paying your kid on that? So yes, it's a tax planning tool. Is it the right one for you?
Got it, okay. And
So-
then real estate investment, so if you're buying a real estate investment property, is there assuming that you can get financing under an LLC, or is there a benefit to buying an investment property under your personal name, or like what's the best practice for buying an investment property?
Best practice for liability purposes is to buy your investment under an LLC.
So a separate LLC that is separate.
Separate LLC. It could be a single member LLC under your name, which files a Schedule E on your tax return. But that's how I have my rental properties.
Okay, and then when you're buying the property, let's say there's financing involved and you're putting 20% down. That 20% that you're putting down, if it's coming from, like if you're moving it from, let me give you like a personal example.
Yeah, sure.
It's funny, we get asked this all the time from people that don't wanna loop in their financial advisor, or they don't wanna ask their CPA because they're like wanting to invest. And so have you guys been asked this before? Like how, like Joe, how does he buy his properties?
A new LLC.
Like, and he just does it each one, right? Like he knows what to do.
Yeah, we write the contract in his like main one, and then when we
Assign it.
close, he assigns it
Okay,
to the
so
new one he creates.
using her client as an example, so he creates an LLC and he's a serial investor. So creates an LLC as while he's under contract. Do you want to invest into that LLC's bank account from your personal, like moving personal that personal 20% that you're putting down, put it into the bank account of the LLC and then have the LLC pay the title company? Or can you like does that pierce any kind of corporate veil?
It doesn't matter at the beginning.
Okay, so at the beginning you can move, like when you're at the title closing, you can wire money from your personal account even though you're buying it under the LLC, like, and then
Because you're funding the LLC at that point.
Okay.
Any money you move is you're funding it.
so you can fund the real estate,
Yep.
like it doesn't have to hit an account.
You can fund your account, you can fund your business too. Initially, you would have to fund your business.
Yeah,
So
but does it
it's
have to go to the business and then to,
not when it comes to real estate when you're starting out,
okay, got it,
you know?
okay,
So a little more on investment real estate. I'm a big believer in investment real estate.
same,
I just bought my son a condo by UCF 2 miles away, and in 2 years it went up $100,000.
hell yeah.
And I mean, I get
And you saved
roommates.
50 grand by not having him pay rent,
say 55 by he has a roommate
hell yeah,
that pays for half of it.
I love it.
So my husband thought I was nuts, but he
Smart.
thinks I'm nuts most of the time. So I just go with it. And then he was, oh, that was a good idea. Yeah, I'm like, okay, So that's worked. Another,
So how did you do that? Did you set it up and hit, like,
I did not set it up in his name. I do not believe in putting things in my kid's name, because I don't know, my kid could become my kids are good, but it's just that they need to live their life.
so his friend, so you have it set up as an LLC, right? If the roommate gets hurt at the property,
Yeah, that's insurance.
so your insurance ideally would cover it. Let's not
Yeah.
use you as an example. Let's use
Yes.
an investor
No,
owns a
use
property
me
as an LLC.
example, that's fine.
Is the LLC, is there protection in place to you and your family?
It is.
And is that because the corporate veil hasn't been like pierced? Is that a
No,
thing?
the LLC is not a corporation, right? It's an entity, okay? So for asset protection purposes, you wanna be able to, the reason legal wise, and I'm not an attorney, so
Yeah.
this is just, I'm putting my disclosure in there. Legally, since I used to do real estate in New York and all of the real estate companies, every building had a different LLC.
Yeah.
Every building would, cause you wanna cocoon the liability in one place, right? So if I set up an LLC for that, because if anything happens they sue that LLC, it's in that place, right? They're not coming after anything else that I
So
have.
you personally are, like on Sunbiz, you're the owner of the LLC, right?
Correct.
Like you personally?
Yes.
And so you're still protected.
Right,
Um,
I'm the owner of the LLC, but the LLC owns that business, so that's the reason why people set up separate LLCs for each
Yeah, yeah.
company,
So so that single LLC,
is for
if
that
that
one.
LLC is sued, that entity is sued,
That's
then
that company,
that company is responsible
correct.
for, got it, okay.
For legal purposes, you have to talk to
Yeah,
an attorney, but this is how I,
And then do you take a, like the kid, if he's paying rent, do you set up,
a lease,
yeah,
yep,
yeah, and then cause you could structure that where you're essentially taking a loss too, right? Like if you
it's
have
a rental
mortgage-
property, yes.
Yeah, that's so smart, okay. That's smart.
It's not like you're taking a loss, it's a rental property.
No, but you're not paying taxes on any income there.
Well,
either.
most rental properties, we have depreciation, right?
Yeah,
So although, cash basis, you're gonna be, you have extra cash, right? But you get to deduct the depreciation, which is on the books.
yeah.
So most real estate, you end up with a loss at the end.
All the people that own condos now, especially with the new laws in Florida, there are going to be so many opportunities to take because all the assessments that are happening too,
Mhm.
like all tax stuff. In fact, if I
Yeah,
was
everything, when you have a rental property is a business, let's go on to rental properties.
Mhm.
A rental property is a business, when you have a rental property, it is considered a business property. For all intents and purposes, tax, legal, everything, it's a business, right? So it's a passive business by definition. So there are also rules, when you are a real estate professional, there's a special rule on rental properties in general. You can deduct up to $25,000 of a loss on a rental property against your active income, which means the income that you're making normally. But if your adjusted gross income, which is something hard to explain to you guys, is more than $150,000. So if you guys are making more than $150,000 on your tax return, that loss is not, you're not able to deduct that loss anymore. But that you don't lose that loss. It gets cocooned in your tax return. That is why when you go to a new accountant and they ask you for your prior year tax return, there are certain things on that tax return that can help you in your future. So don't question these things when it's an important thing. When I ask people for their tax return, why do you need my tax return? There are things in your tax return that could help you in the future. And I always like to look at that. So that's one of the things. However, when you are a real estate professional, which if this is your full-time job, there are definitions of a real estate professional that the IRS defines real estate professionals. You are able to deduct the loss on a rental property on above and beyond $150,000. So you don't get to suspend that. You don't need to suspend that loss because your rental property becomes part of your real estate professional business.
is it up to 25 grand each property?
Under 150,000 AGI, not each property
Okay.
altogether, aggregate rental loss.
Oh, got it.
But for real estate professional, that rule is void.
That's what I'm saying. For real estate professionals, is it up to 25 grand each property?
It could be anything. The rule that I just mentioned first,
Yeah.
that's for normal people.
Uh-huh.
For real estate professionals, that rule does not apply because your rental property becomes an aggregate with
Oh, I get it.
all of your stuff.
Got it.
So you guys get the benefit of a rental property no matter what your AGI is.
Got it.
So that is why it's important that real estate professionals take advantage of rental properties. And it in the long-term effects, it's part of your wealth building. Real estate is one of the number one wealth building thing. You start somewhere.
Yeah.
So that's a key, but that's a key for you to understand that if you are a real estate professional, no matter how much money you make, you have a rental property, you can deduct that loss.
We work with a lot of real estate agents as their real estate agent. Like you guys know that we give them a 25% referral, and this happens a lot. And a lot of them have their licenses specifically. It's called an aggregate rental loss, right? Or
Mhm.
what's- yeah.
So there's a couple of rules that you follow under that with hours and time that you spend and all that stuff.
Yeah.
You could be a real estate professional and that's all you do is rental real estate.
Yeah.
You know, cause you're spending all your time on that. And then that $25,000 rule is no longer applies to you. If you're a doctor or a lawyer and you have rental property, sorry, that rule applies to you. So,
Okay.
any other questions, you guys?
How do you figure out what to like quote unquote pay yourself from your business account? Or do you just kind of, you can use it no matter what and then just not write things off? Like, how does that work exactly?
Well, if you're an LLC, or, so you mean,
Yeah.
so when you start, if you're an
Yeah.
LLC, so in her scenario, would you be paying yourself? Like, how would you take those draws?
So when you're a single member LLC, for tax purposes, that doesn't matter because you're gonna pay tax on everything at the end, and you're not taking wages. You're not a corporation. It's not complicated. But how I would say you pay yourself, make sure that you start very small, like your basic needs for what you
Like
need for your.
rent and car
for your-
payment.
You start very small, but before you do that, you put the money away for taxes.
Yeah.
Take into account your taxes.
Is there a mechanism, so Compass pays the money into her now business account for her LLC, and then for her to move that money into her personal account? Is there, or I guess you guys will see that on bank statements, like her accountant will see that money being moved into her personal account, right?
Yeah, but when it comes to a single member LLC that's disregarded for tax purposes, we don't track the distributions,
Okay,
you know,
so you don't have to, like, could she pay her, like, personal credit card out of her business?
she shouldn't do that.
Okay, so but she can move the
She
amount
can move her
into-
money into her personal and then pay her
Like,
personal
as
stuff
needed.
out of there, yeah.
Okay, so you don't have to
Don't-
formally give yourself a paycheck, you
Yeah.
can just,
Yeah.
as you go.
Transfer a little
Yeah, you
bit.
transfer, like how I do it, so I get wages normally from my S corp. But in general, for my business, I have a distribution amount that I take every month, an exact amount.
Yeah.
If I need, that's an automatic transfer. Automation is really important in any type, I have some videos that talks about that. So I have that exact amount. If there's a need for an additional distribution, then I would do an unplanned distribution, you know? But otherwise, I have an amount that I take, cause that's the amount that works
Right.
with my budget.
That suffices.
Yeah,
But if you're a C corp, you should, the expectation.
Well, you shouldn't be a C corp. If you're an S corp,
Sorry.
then you have wages, and then, you have wages and you're paying yourself wages, so that amount you automatically pay yourself. But, so there are two ways that you can take money out of an S corp. You can take money as a distribution or as payroll. Your payroll is usually what's set, and you pay your social security and you have taxes withhold from your payroll that you're using an additional payroll company. Your distribution is your K1 income. So there's two ways that you take money out of an S corp, a distribution and payroll. There's two ways that you're taxed on your money on an S corp, your payroll and your K1 income. You are not taxed on the distributions you take. You're taxed on what the K1 income is. I know that's a lot to take in, but I want you guys to think about that when you do set up S corps. And you need to understand that. And if you ask your account,
So when you said you're not taxed on the distribution, so does that mean that do you mean the business isn't taxed?
the business, when you are an S corp, the tax is calculated, your overall income tax is calculated at the individual level. Just like I said, when you put all your pots in,
Yeah.
that's when your tax rate, your tax bracket, everything is done,
Yeah.
right? So your K1 will show you what your business means. So let's just say you were an S corp, right? And you took $100,000 of wages. So your W-2 has $100,000. The company paid Social Security and Medicare, and and you're withholding yada yada yada. Then you net it at the end, taking into account your payroll, $100,000. So your K1 is gonna show $100,000. You might have only distributed to yourself 50 of that 100,000. 50 is still left in your company.
Yeah.
You still owe tax on 100,000.
Okay, so
So that's how distribution is different from K1 income.
okay, so is the best way to do that through your payroll as a W-2?
No, you should do both. There should be an allocation. Your CPA or your tax preparer, when you're setting up payroll, you should contact them and adjust that allocation annually.
Okay.
You know, there's no hard and fast rule. The IRS just says S corp shareholders need to be compensated through payroll.
Yeah.
They don't say how much.
Okay,
They don't
got
say
it.
what the rule is.
Okay.
You know, so because you save money when you take part of it as a payroll and part of it as
Yeah.
part of your K1.
Can it be inconsistent, like as business like ebbs and flows? Like we had like when the shit with Ukraine was going crazy, I took myself off of payroll for an extended period of time.
Right.
And then if I bounce myself back on, does that, or do they look at the whole year?
Well, you look at the whole year, but it's a tax planning tactic. You
Yeah.
took yourself off payroll maybe because cash flow was an issue.
Yeah.
So, you know, there are reasons why these things, you can go back and forth.
Oh, got it.
So,
Okay.
you know, at the end, you can look at what, you know, your allocation is. So I usually look at my client's allocation at the end of the year to set them up for the next year.
Got it. Okay.
I also look at the allocation
So
when
you
they're
look at the whole thing, like
I look at the whole thing.
Okay.
That's when I usually look at them. If I see that there's things happening and we need to do additional tax planning along the year, depending on changes in their business, then I look at it then. That's when I usually do. The other thing that you need to think about is when you're closer to retirement age, Social Security becomes a question.
Yeah.
So you wanna make sure that you understand how the Social Security laws work and that you are paying yourself wages. And you are not deducting everything in the kitchen sink as a W-2, as a Schedule C, because if something happens to you and your kids need to get Social Security, or somebody dies, or you retire and you're getting $300 for Social Security, that's when you realize nothing is for free.
Yeah.
You know, you pay for it now, you pay for it later, your neighbor pays for it, or you're the neighbor paying for it. Like I'm paying for a lot of my neighbor's roof right now.
Oh my God, I missed that.
So I do have a lunch meeting, but I will
This was
spend
amazing.
another 5 minutes with you guys answering some more questions.
No, we'll let you go.
I had one
This is
more
amazing.
question.
Yeah, I have a good question. So as a real estate agent, when is the best time to pay taxes? Do you think quarterly or wait at the end of the year?
Oh no, you're required if you make more than $1,000 to pay your quarterly estimated payments. If you don't, after a few years, the IRS is gonna start charging you penalties.
So always quarterly for 1099.
So-
I suggest even if, when you are on an EFTPS system, or you wanna do a direct pay, I suggest that you do it monthly sometimes.
So EFTPS, that's like you get a paycheck for selling a house and you kind of go directly there and give them like the taxes on it?
Yep.
Okay.
And that is important that you print your history out at the end to give your accountant so they know what you've paid in.
Yeah.
Yeah.
How does one know how much to pay in taxes monthly? Is that what an accountant would do, I guess?
An accountant would help you with that, that's number one. Number two is that even if you pay something, you can set yourself up with what you're paying a regular amount, right? If you do a deal, this is what I would do. If I do a deal and it's a big deal, then I bump that up to help me, you know, do like a 30% in there. If you're, some people, when you do withholding, right? When you are a regular employee and you do withholding, some people withhold the maximum amount because they like a large refund at the end. Because it's like a savings. You're not gonna save that in your normal life. But when you get that $5,000 refund, you were able to save that. Some people don't like to give the IRS money and they're disciplined and they can do the savings themselves. So it just kind of depends on who you are. Know who you are, don't lie to yourself.
Yeah.
You know who you are. I'm always late, I know that. You know, so I know, I work on it all the time, ask Chala.
There's a thing called time blindness. It's a real thing. Have
That's
it.
a real.
I work on it, that doesn't mean I get where I wanna be.
Yeah.
Yeah.
But understanding what your Achilles heels are
Yeah.
important to have the right mindset when it comes to money. You know, admit to yourself that you suck at doing certain things with credit cards. Like I pay my credit card bill every week
Yeah.
because I don't use cash.
Every time I open the app, I'm like, I'll just
Yeah.
pay it.
Yeah, I don't use cash. When my kids ask me when they first started their job, Mom, how often should you pay your credit card? My credit card bill. Pay it when you get paid.
Yeah.
so you don't get stuck with debt. So these are all little things that I talk about on my YouTube channel. I have just started my financial literacy journey. The talk that we're having now is actually what I really want to do. The videos are great, but there's no audience. And I like the audience interaction, like how I'm interacting with you guys. So my goal for the Modern Savvy CPA is 3 things. 1 is the consulting part, which I see the need for. 2 is the YouTube, the social media, which is totally free of charge for everyone. So you can log on there and look on that. Eventually somebody's gonna pay me to do that. And all I want is to clear the expenses for that. So that's my philanthropic thing. My 3rd aspect is what I really love to do, is to do workshops and seminars and paid speaking engagements. So I feel that my passion is financial literacy. I feel that there's a need for it in our society. I think that it doesn't matter how much money you make, it's how you handle what you make. I am living proof as an immigrant girl whose dad came with $100 in his pocket 40-something years ago to this country, that I can safely say that my net worth is over $1 million.
Incredible.
Part of that has to do with a lot of real estate. So real estate holds a very, very special place in my heart.
That's
And
incredible.
I do believe that it is one of the most important building blocks to building wealth.
I agree. Thank you so much. This was so incredible.
So you guys
That was amazing.
met,
Thank
I'm
you.
gonna hug you.
That was so good.
Nice to meet you all.
Thank you.
This is my card, and in the back is my YouTube channel. Please,
Guys, everybody
subscribe.
please make
Thank
sure
you.
that
I had
you
a question, one more.
Go ahead.
wait, hold on a second. I have to upstairs. Guys, can you please, and everyone on the phone, can you guys please make sure to
Really
go
good, thank
to her YouTube channel, subscribe to her YouTube channel, write a comment on one of the videos for her, like, engagement matters a lot. And follow her on Instagram too. And like just like engage with her content, make sure it matters.
I'm on social media. Share with your friends, because this is how you're gonna help your people for, because I eventually